Is the equity spinoff enough to unlock Daimler Truck's value? Welcome to the Valuation Masterclass case study, where you'll learn about interesting stocks and how to value them. What's interesting about Daimler Truck is that 99.9% of the shareholders approved the spinoff. This is Andrew Stotz of the Valuation Masterclass. Let's get started. This information is for learning purposes only. This is not investment advice or any type of recommendation. Now, Daimler Truck is in the industrial sector, and it's among the world's largest commercial vehicle manufacturers with 500,000 units produced. Of course, it's in Germany, and there's three things to know about the company. The spinoff allows for enhanced focus on profitability, leveraging Asian footprint to drive top-line growth, and strategic partnership to bring autonomous driving forward. Key statistics, well, analyst consensus, there's 19 analysts covering the company, and the upside is 43%, it's a buy. The PE is about 10 times. There's no dividend right now. My estimate, an upside of 35%, which also would be a buy in this case. Now, I will mention one thing that I think is interesting, and that is German companies have been building strong relationships with Chinese companies and Chinese consumers. But I would argue part of what America was trying to do when it was basically trying to get Europe under its control is trying to sever the relationship between German companies and Chinese companies. And I would say that they've been pretty successful with that and will be over time. Why is it important? Because America is lining up to have China as its number one enemy. And so it wants to get Europe on its side. And I think that that is a risk for any European company right now. What do you think? Is that possible? So let's talk about the restructuring of the business. Previously, Daimler was Mercedes-Benz, Daimler Truck, and Daimler Mobility. But since 2022, what's happened is that the shareholders of Daimler approved to spin off the truck segment. So the company became Mercedes-Benz and Daimler Truck. So what we're looking at now is the spin-off Daimler Truck to try to understand its standalone business. So what is an equity spinoff? Well, in an equity spinoff, a company decides to create a new entity out of its existing operating business. Now, the best way to do that is to make it a new listed entity, so it's immediately listed in the stock market. The newly created shares are distributed to the existing shareholders, unlike in a carve-out where the company sells its shares in an IPO and raises new capital. The idea is that two independent companies are worth more than the single entity. Let's look at the revenue of the company. After the spinoff, trucks and buses have been separated from the car segment, so it's only trucks for this company. 41% of its business is in North America, 31% in Europe, and 28% in fast-growing Asia. But as I said, I believe that the U.S., part of their strategic plan is to align Europe solidly with the U.S. when the U.S. attempts to have a showdown with China. What's the story? Well, the spinoff allows for enhanced focus on profitability. Daimler uses value added as the most important performance measure. On page 43 of the 2020 annual report, they said, value added shows the extent to which the group and its divisions achieve or exceed the return requirements of the investors, thus creating additional value. So at that time, what they saw in 2020 was that Daimler Group had a loss of value detracted or subtracted of 591 million euros, with profits coming out of Mercedes-Benz car and vans, but losses coming out of the truck and the mobility divisions. And this is part of why they've been focusing on getting Daimler out of Daimler Trucks out of there to try to get it on a standalone basis. Now, analyst consensus expects convergence in profitability. Compared to its competitor Volvo, Daimler Truck has shown a worse gross margin. In fact, look at that Volvo margin. Steady at about 24%, and even during 2020, it didn't go down much below that 24%. Very impressive. and part of it's their exposure to China. With the spinoff, management hopes that each segment can focus on improving its profitability. So the Daimler Truck segment had a gross profit margin of about 21%. And then in 2020, during the COVID pandemic, it went down to 15%. And in 2021, it came up to about 18.5%. And so the company is starting to move its profitability, but it hasn't yet gotten back to pre-pandemic level. Our forecast looking forward is that it will get slightly above pre-pandemic level by 2023. Analyst consensus is optimistic that Daimler Truck can catch up fast and improve its gross margin. So before I go on, great to see you, Tubahu. So you asked the question, is there a difference between an equity spinoff and a divestiture? With a equity spinoff, as we've seen in the case of Daimler, the existing shareholders of the parent entity where Daimler Trucks was spun out of end up being the shareholders of the spinoff. When it comes to a divestiture, it means that they're divesting of their investment in that company, meaning they're selling that company. So that's the difference between an equity spinoff, where the original shareholders are still going to own shares in the equity spinoff, and in a divestiture, they're selling out that division. So increasing profitability is number one priority. In 2022 first quarter, Daimler Truck revealed its plan to reduce costs and boost margins. Of course, remember, it's easy to say these things, but what is the strategy to get there? We can see that it aims to reduce fixed costs by 15% by 2025. It also wants to reduce CapEx and R&D expenditures by a similar amount of minus 15%. So that would get its profitability up to about 8 to 9%, which is not that impressive yet. So there's a long way to go, but man, it's a tough business. Now, leveraging the Asian footprint to drive top line growth, let's look into that a little bit more. We can see the 2021 numbers, and there was 143,000 trucks sold in 2021 in Asia. That's pretty impressive, and that's up 30%. So Daimler Trucks aims to expand its market position in China as it expects higher growth than in other regions. Therefore, it's established local brands to meet the different countries' requirements. Heavy-duty trucks are still relatively underpenetrated in Asia, providing robust growth prospects. Now, let's look at point number 3, strategic partnership to build autonomous driving forward. In 2020, Daimler entered a strategic partnership with NVIDIA, the world's largest maker of AI chips. NVIDIA's chips are currently the most advanced in the market. From 2024 onward, the company will roll out a fleet with fully automated driving function. So now let's look at our forecasts. First, there's 19 analysts, and they see a 43% upside. Almost every analyst has a buy and believes that the spinoff allows for enhanced value creation. When I say the spinoff, I mean the spinoff of Daimler Truck out of the parent company. And we can also see that analysts predict stronger gross margins, which are converging to competitors' levels. So let's look at the P&L. There's a strong rebound in revenue that we expect as demand for trucks is higher than supply, given the current supply chain constraints. Net fixed assets on the asset side of the balance sheet increased slightly, so no huge expansions are planned right now. And liabilities, Daimler Truck has moderate to high leverage with a debt to equity ratio of 1 time. The company announced to follow a 40% dividend payout policy with effect from January 2022. If you want to learn how to value companies like this, join my 6-week online Valuation Masterclass Bootcamp, where you're going to learn practical valuation skills by valuing actual companies. You're going to access my tools, tips, and tricks. You're going to join a group of inspiring financial professionals and get a job through my network of financial industry leaders. The next boot camps are scheduled for, well, July 25th is the next one. That's a week from today. October 10th is next, and then January 9th of 2023. You can join for just $797. Just scan this QR code to learn more, or just go to valuationmasterclass.com/bootcamp, and I'll see you in the bootcamp. Let's look at valuation. I expect Daimler Truck to return to positive free cash flow of the firm after it was negative in 2021. In fact, it should be pretty strong going forward. So let's look at my value estimate. In contrast to consensus, I expect that it takes longer for Daimler Trucks to improve its margin. So I'm saying an EBIT margin at about 7.6. I value the company by using free cash flow of the firm and a terminal growth rate of 2%. And I'm using, as say, the free cash flow to the firm method. So my upside is 35%, downside is 60. Whoa. And upside is 10%. So I think I got those reversed. Sorry. My downside in a bear market case is 60%. Upside is 10%. So what are the risks? The key risk is geopolitical conflict. Ongoing supply chain disruptions create shortages like semiconductors and increase production costs. Failure to keep up with technological changes could result in a loss of market share, and labor shortage of specialist employees creates competition among manufacturers. In fact, I think when you look at this company and what's happening in Germany, it's pretty terrifying, the pressures that are going on in cost in Germany. So what are my conclusions? Analysts might forecast drastic changes in fundamentals too early. In the long run, it should be able to close the gap to competitors in terms of profitability, but it's probably going to take longer than what analysts are expecting. Valuation does not look expensive to me at this level. So let me ask you, is the equity spinoff enough to unlock Daimler Truck's value? This is Andrew Stotz of the Valuation Masterclass. Let me know if you have any questions or comments in the comments.